Okay. Good morning. May 27th, 2021. Lots to talk about. Not really, but quick on this. So what I'm going to do now is I want to get these videos out prior to the market open, 9:30. It's about 8:44 right now. So what I'm going to do, I'm going to make them a little earlier. I'm going to start doing the book at the end of the day, and so hopefully I can make these like five minutes or so, and I'll talk because post market's like who really cares, but pre market's like, yeah, we want this at the open. All right, so one sec. So that's how it's gonna rock out here. So we got 3 points of economic data this morning that do matter to this market and that are driving some stuff this morning. So we got durable goods orders declining 1.3%. That was below estimates. We have initial jobless claims, another 406,000 people applying for first-time unemployment. And then we had Q1 GDP, which was unrevised from its initial estimate of 6.4%. And how is the market reacting overall to this range of data? They all came out at the same time. We have the S&P 500 flat. We have the Dow Jones higher, and we have the NASDAQ underperforming down about 0.4%. Overall, the Dow is reacting positive to this data, so is the S&P. So the broad market is liking this data. Now, what are precious metals doing? They're going higher off of this data. Silver's still down about 0.4 and gold's down 0.2, but silver was down 1% before the data, and gold was down, I don't know, like another $7 or whatever. So what does that mean? When you see precious metals rising with the market off of data, and look, this could reverse at the open, but at least right now, the way that they're correlating together, what does that tell you? Well, what it tells me is that it's the market anticipating the Fed issuing more debt. If we had a real economy, you wouldn't see precious metals rising with this environment if it was good economic data, right? Good economic data would put pressure on metals because they're traditionally safe haven assets, and it would support the market because it's a confirmation that there's good things going on in the economy, and in a real sense, you would want a good economy for a better stock market, right? But that's not what we have right now. I mean, there's a couple data points you can look at and say, our economy's in shambles compared to what it was before, but yet stocks have been hitting record highs like it's nobody's business, like it's going out of style. I mean, really. So I picked up 2 points for you. Long-term unemployed as a percent of unemployed. So the amount of people that are for a long time out of the labor market. Before, in February of 2020, it was 19.3%. Now it's 43%. So it's over doubled since that. Long-term unemployment has over doubled. And it's terrible for health. Long-term unemployment, depression, weight gain, I mean, everything you can possibly think of. It's not healthy for the human being. So that isn't fun for me. Labor force participation rate, one of the most important, most fundamental drivers of a healthy economy. You need people working, right? Well, in February of 2002, it was 66.6%. Now it's 61.7%. And I think it was about 63.5% before the COVID crash. Does that sound like a healthy economy to you? Not to mention money velocity at historic lows, and off of this data that we just got, durable goods orders. I mean, nobody's ordering anything. People are down 1.3% in 1 month. I mean, this is terrible economic data. Hence why precious metals are rising. Hence why the stock market is rising off of that, at least for now. And so that's really the deal right now. We have the dollar fluctuating around this 90 level. It went below it. It's above it now. We'll see. It's still for me an important driver. And when I first saw this data, I try to have an objective view on it before I look at how the market's reacting. I said, I mean, the jobless claims came in slightly lower than expected, so that is positive for the economy, and so you could expect stocks to be put under pressure from that. But when I saw the durable goods orders, I said, It looks like this should be negative for the economy. I mean, this is not a good data point to get. I mean, it's a terrible data point to get. And then unrevised GDP, I was like, whatever. So I did expect this to be the case. And in terms of what I'm going to be doing today, by the way, crude oil is flat after the data. We'll see what happens with that, although it's slightly lower for the night. And so, another kind of consolidation, and I'm chilling. I'm sitting on my positions right now in gold, silver, oil, and into a couple different sectors of the market. I'm in tech, industrials, and some consumer staples. So, yeah, we're gonna let this play out. I don't think there's any really crazy buying opportunities today, but if we get pressure or if we start booming, any reaction in one direction will probably cause me to take some sort of action. And so, yeah, I think that's about it. I will see you at the end of the day. Please like the video, hit the subscribe button. You know the deal. All right.